Drop it.
And good morning, team. How is everybody doing? We got Josh. Good morning. Ekatic. Good morning. Mike D. Good morning. John, Chris, Teresa, Angel, J-Time, D. Baker, Phoenix. Phoenix, hope you're doing better, man. We're going to have a conversation. We're going to have a conversation, sir. Karen, new name. Karen Wawad. Good morning. Gavin. Hello. Knife. Shankster. Good morning. Quiet Cowboy. Old Saint Nick. Stock Girl. Skipmark Productions. Alex. Jerry. Romeo. Tori. Good morning. H. Hernandez. How you guys doing? All right. So, you're going to watch. I'm going to put on the show for you guys. It's a clinic. Now, before we get started, right? I want you guys, when you're entering a trade, we're thinking about entering a trade. I don't want you guys to think about like the money you're making. I want you to think about the purpose of the trade. What is your thesis besides, oh, I can make money on this trade? Besides, it's an A setup or it's a B setup. What is your thesis? What have you figured out relative to your zones, the momentum, relative to maybe multiple time frame analysis? These are things you have to look at. Now, you know what? I don't want to be a dick. I do this professionally. I've been doing this for 14 years. I'm giving you guys a shortcut. And the only way for the shortcut to work is for you guys to listen. All right? Seriously. This is not Sesame Street. This is not where you go ahead and lose your ass and then go into market talk and then cry and say, I have 147 IQ. I don't know why it's not working. It's not working because you don't work. You're not taking this seriously. Guys, if you're here to make serious money, you have to treat this occupation seriously. This isn't a get rich. This isn't making easy money. This isn't, it's none of those things. Okay? None of those things. This is a bunch of smart men, the most criminal-minded men who decided that instead of robbing you in the corner, they're going to rob you in the markets. That's who I am. I'd rather rob you in the markets than rob you in the corner. I don't do no time, and my butthole remains the same size. Okay, so let's go ahead. Currently up in this trade. I was up as high as 16,000, but I'm giving you guys a fucking pep talk. We do have a level here. It's 11,000, 11,400. You know what? That was a hard rejection. What I'm going to do is I'm going to go ahead, and because I know I've made money in this trade, I'm going to go ahead and just set my stop here. Right? That is now my stop. Okay? As it makes its way up and builds momentum, okay, I'm going to now raise my stop. And I'm going to raise it just under my zone. So, whether I make 13,000 or I make 12,000 on this trade, frankly, it doesn't matter anymore. See, stopped out. Made bank. That's it. And then we got our knife. Okay? This looks criminal. This looks criminal, but this is the market. You signed up for this game. My job is to teach you how to navigate it safely. Don't be aloof. Don't get caught up. Don't romanticize dollars. Please, let's not do that. Let's not. Okay, so how do we deal with this situation? We got knifed out. I'm profitable. Let me go ahead and check. Let me check. What did that order give me? And I would show you guys directly on here, but then I run the risk of somebody saying a fucking account number, so I can't do that. So, let's see. And see here. Okay, made $11,750 on that trade. Right, made $11,750 on that trade. My day should be done. But I'm going to go ahead and trade, and I'm going to trade live for you guys so you can really, really understand. Like, I don't want to say it's easier. Right, John Alvarez, good morning. I don't want to say it's easy, it's simple, okay? What I want to say is, if you follow the rules and you trade with intent, you have the best opportunity to be successful in these markets. All right, so Matthew, good morning. Okay, so let's look at this. This is Nasdaq. What I'm going to share with you is how you could apply it to pretty much anything. How you're going to apply it to trading futures, options, shares, whatever. Wreck-It Ralph says it's learnable, not easy. Right. It becomes easy after you learn it. Right. Repetitions. Let's go ahead and take a look at this. Right. So, what makes this hard are your emotions. Now, do I go ahead and jump into this trade? No. Why not? There's a level right here. There's also a level right here. There's also a 200 right here. Now, in order for the market to entice me, I have a level here and a here, right? In order for the market to entice me, it needs to break these levels here. Really, really that simple. Or I have to see a bounce off the 200. If I'm going to play the bounce, I'm going to play the bounce off the 200, and then my stop is going to be right in this zone right here. Okay. Alternatively, I could go ahead, see if we get a retracement down into this zone, and then I could use this level as my risk. Guys, you want to use levels as areas of risk. It's kind of like you're going up steps, and if you got a few missing steps along the way, what are you going to try to do? Jump 4 or 5 missing steps? Well, good luck on that one, right? You got 4 floors down, and it's going to hurt. So I'm looking for support. I'm looking for those steps to support me as I make my moves up. If it's not there, I don't take it. Okay? So we're going to go into this here. We have the 200. What I'm going to do, all right, do we get a 200 break? I have to wait. In order for me to be able to understand what's happening here, I need to see either a trade design commit, right, with our conditions being met. We have 3 of these conditions being met. We also have a level here. All right, now I'm going to go ahead and set my limit sell and not buying. And I'll wait for it down here. That's what I'm waiting for. Once we get a break, I could then set my stop right at the 200 and we could just call it a day. Or I could set my stop up here and we could call it a day. Okay, so right now, I need to let the trade pan out. All right, now I'm going to go ahead and set my stop just above the 200 right here. If I get stopped out, I get stopped out. Good. Now, we're able to see that is reacting off the 200. Now, do not get caught up in dollar amounts here. Okay? Please do not. You don't want to get caught up in dollar amounts. Everything is scalable, right? I'm obviously playing with a larger port. So, back here. I made an attempt on my entry there. I got stopped out. All right, so we have another attempt here. All systems go. I'm going to try it one more time. And I'm going to, once again, just manage my risk. That's it. Okay. I can manage my risk up here, just above the level. I'll put my stop right there. My stops are in place. I get stopped out. Cool. That was twice. Okay. Am I in trouble? No. Now I get to play my bounce. And here we go. Now we're profitable. Now we're profitable, boys and girls. I have to offset some of my losses. I did have a really, really big gain on the march up. Okay. Now what I'm doing is I know that the 200, it could act as support. But I also know that I could get rejected by these EMAs here, as we're seeing. We saw that rejection. Do we have the momentum to break through? If we do, I'm going to set my stop back in this zone right here. And we're going to let the trade play out. That's all we really can do, right? I can get wrecked on this trade because I don't have a stop. So let me go ahead and set that up right now. I'm okay with losing. I don't let one or two losses, especially if they're sub 2 or 3,000, destroy my day. Because a winner can be 5, 6, 7,000. Am I making sense here? Again, everything is relative. You do not have to play with my size. It would be foolish for you to play with my size right now. I could see some sensitivity here. I'm seeing some sensitivity here. It's coming up. All right. So it's coming. That's what she said. Well, that's what I said. But you see the sensitivity? I'm going to close my position there. Too much sensitivity here. We got that wick. I'll take my profit. Okay. Now, what am I waiting for? Are we going to break below the 200 once again? Or are we going to break above 14,803? We have an EMA sandwich there. You guys, you would be foolish to play with me. Jeez, the amount of times I said that. Wreck-It Ralph, be nice. Okay, so we have the EMA sandwich here, and we also have the level. And now that EMA sandwich, although very thin, is giving me uncertainty vibes. Okay, and so here and here, uncertainty vibes. You have parabolic SAR and Heikin-Ashi trending down. But we don't have any true sense of direction. This is, you're getting sandwiched by level, the 200, the EMA sandwich here, level here. Something's got to break. Something's got to break. So I have to wait for a break of a zone, a break of a level for me to take the trade. And we're going to do it. Right? This is patience and this is waiting for a trade setup. Jenny G, smart move. Boys and girls, be more like Jenny G. Right? Quiet cowboy, RSI moving average, pretty flat. Absolutely. You don't force a trade for the sake of forcing a trade just to say I want to make money. You have to trade with intent. Okay? So, here we go. We got a break above here. We have a break above a level. We have a shift in trend here with Heikinashi. It's a 50-50 to the downside. So let the market develop. All right. Don't have to take the trade. TJ, absolutely patience and precision. As they say, not all money is good money. And the best trades are the trades that you know why you got in and why you got out. Now, surely you can go into the 1 minute here and scalp in between, but unless you got experience under your belt, like let's say DM Ohio or Wreck-It Ralph, or unless you're playing with large size, you don't play on the 1 minute. Now, would I play on the 1 minute? Sure as hell I would, right? This is a live stream. I want you guys to learn. All right, so we have a break of this zone here. I'm going in. Now, where is my risk? I have to establish risk here. Okay. Now, what I'm going to do is I'm going to establish risk somewhere around here. That's going to be my stop, right? I also have a zone up here. Of course, this thing can fail me. And guys, losing is part of this. The losing is part of this game. Okay. So what I'll do is we get a nice pop here really quickly. Who's not content with 1,500 bucks, 1,300 bucks, 1,200 bucks, 1,280, right? 1,400. Now I have a decision to make, right? I have a decision to make. My decision, I have to make a very, very important decision, right? Do I hold to up here, right? Or do I secure the bag? Now, this is at your discretion. I don't want you guys to get seduced by the opportunity to make more money, right? For me, it's always a calculated decision. Am I content with 23, 28, 26, 3,600, 3,500? See? Now, if you're greedy, I had to get out before that happened. You see how mean that was? You guys, I'm trading in real time. I'm trying to illustrate. Now, if it was me not giving you a narrative, I go ahead and just take profit, right? But you see how mean that is. This is exactly what I'm talking about. It's mean. It is mean. So we see we have support off the zone. I'll go in again. Don't get seduced by dollar amounts, guys, or shit like that's going to happen, right? So guys, considering my position size, it's 1,000, 2,000, but that's 16 contracts on Nasdaq, right? If you were playing one contract or you were playing a mini, totally different game, right? Excuse me, a micro, much smaller. All things are relative. Okay. So what I'm going to do is I'm going to have patience in this trade because this is an A setup and we do have a cross to the upside. Okay. The right side of my screen, this is Heikinashi. I use it as a visual, gives me context to what's happening with these check marks here. Okay. So I'm going to go ahead and just let the trade develop. This could be god awful for me. I mean, you guys are like, well, holy shit, $5,000. That's a really, really small drawdown. A very, very small drawdown. Like, I had a $20,000 drawdown yesterday before I made 100K. You see, all things are relative. So please don't ever feel like, oh well, I have to go big and I need to play 16 contracts or 20 contracts. You don't have to do that. Okay? You don't have to do that. Um so let's see here. All right, what are you guys looking at? What are you guys playing? Gregory, I'm glad. I'm glad you enjoy the lives. So, all right, Jenny Spy, all right, NQ. So let's see here. Before I go ahead and look at another play, watching Spy Knife. We need a trend. We need a trend defined. I mean, it's 10 in the morning. Our trend should be defined. Watching AMC. Okay, let's go ahead and look at AMC really quick. So AMC, nice pump here, 30-cent move. Definitely a tradable stock. You have this zone here. Looks like it wants to break this zone. It did come down to this entry point here. But this is probably not the setup you want. It's one check mark. You got bullish Heikinashi. You have RSI elevated. If you want to play a break to the downside, you need a break out of the zone and a break here. Otherwise, you're playing against a trend. You're playing against a trend here, okay, guys? Let's go ahead and look at SPY. So, SPY just really trying here. This is just noise. This is your C setup. Remember, guys, we have A setups that go with the trend, B setups that go against the trend, labeled for you. And then now you just have massive consolidation. I'm not trying to make money in this, okay? Wreck-It Ralph, AMC for small account scalper. Well, bro, they need to make sense of the system that they're using first. By the looks of it, you just have people who are just taking a trade just for the sake of taking the trade and not understanding why they're taking the trade. And then surprise, you get a knife or you get a boom boom candle and it's like, oh no, oh no. Can't have that, right? Um, so looking at the SPY, very, very similar to NQ, just massive consolidation, no trend in sight. Okay, let's go ahead, catch up. Let's go ahead and look at Tesla. And Tesla, just being that crazy person it is, right? Guys, if you want to see a textbook play, here we go with Tesla. You get an A setup that happens right on a zone. You get your entry, you break through. You have a level here, you secure the bag. You see sensitivity in this candle, you get a break, you re-enter. You get a break. She gave you more than a 5-to-1. I want you guys to screenshot this. This is a textbook entry. A bounce off the level, a play up to a level, a re-entry after a level break with risk defined every step of the way. You enter here, you're risking here. You secure it here, you re-enter on break, you risk it here, you run. Does that make sense? It makes sense. Good. Jesus. Makes sense. Good. Good. Let's see. Okay. I'm not doing too good today. Only up 6,000. Okay. So, uh, short makes sense. I want you guys to look at NQ, right? You got your entry. This was our thesis. It was above the 200. Guys, what's the rules for above 200? When you are above 200, you are biased to what? We have the predefined trend. We have the A setup, right? Now we have our trend. So I'll just go ahead. I'll go in. We have a defined trend. What I'm now going to do here, okay, is I'm going to put my faith in the trend. That's all I'm going to do here is put my faith in the trend. So I'm going to put my faith in the trend. And now we're going to go ahead and look at some other tickers. Okay. So let's go ahead and look at SPY here. SPY rejecting off a level, came up to the zone. You have a rejection, but you have your trend. So what are you looking for? You're looking for a retest somewhere down here and an entry. You want to go with the trend. All right. That's all you want to do here. Let's go ahead and look at, throw some tickers out there. Come on, guys. Let's make some money. Throw some tickers out there. All right, let's do NVIDIA. So NVIDIA is in a downtrend. Your governing trend is the 1348 cross, but see what's supporting it here is the 200. The guy, um, if you're going to base it off the 15-minute level, you can base it off the 15-minute level, right? But that's your discretion. As long as you're using levels, you're halfway winning this game, right? So we could see the 200. There's a bounce off of it. We have to see who wins, support or the governing trend. I'm not playing NVIDIA. I will not play NVIDIA. It would not make sense to play NVIDIA right here because you have converging conflict. You have bearishness converging into the 200, basically creating compression. You're creating compression in the trade. Could go either way, right? Compression, consolidation. Okay. All right. So let's go ahead and look at coin. Now, coin just ran. Now, coin, you have a B set up right now. Okay. You know, a lot of you, right, see a run up like this, it gets so fixated, like, oh, we get a doom, I'm going to be rich. No. Do I like this structure here? Absolutely not. Why? Because that's well over 45 degrees here, this structure. Okay. I don't like it. Doesn't look sustainable. But does it mean that we're going to get a nosedive? It doesn't. We can't assume that. Okay? We can't assume that. We can't assume we set up tank. We have a very strong trend that's formed here. A very strong trend. So, let's go ahead. Someone mentioned Apple tanking. All right. What happened with Apple? And Apple is in fact tanking. This is an example of the trend being dominant, right? You go ahead, market open, you break below the 200. So the trend and the rules are in your favor. Now you get a break below this level here. The trend is in your favor. Apple is flat out being murdered. Absolutely murdered. Okay. So let's go through our checklist, boys and girls. Let's get paper and pen. And let's do this. You ready? Let's do the paper and pen and let's do this. Going through your progressions and reading the trade. You guys want to do that? I need some hands. Going through your progressions. Okay. This is how you do it. Okay. You do not take a trade just for the sake of taking a trade. We go through our progressions. Okay. We're going to use Apple, for example. Apple, first read. Where is our dominant trend? That's your first read. As yesterday, that's your first read. Where is our dominant trend? It's our cloud. It is our 1348 cross. That is your first read. Step number one, Identify the direction of the market on a larger time frame. You're not going to understand the direction of the market on the one. That's why people on the one get it nice and get a nice thick ramming sometimes, right? You need a larger time frame to identify the trend. For me, the 5 minute is good enough because I'm not staying in my trade all day. Makes sense? Okay, so we have identified the trend. Good. Once we've identified the trend, we have to go ahead and identify all possible levels, whether you're getting your levels here, right? We give you guys levels here, we give you guys zones. You have all the bits of information to plot your levels and zones, right? To keep your chart clean, you just plot the levels and zones presented to you on the time frame you're building your thesis off of. Fair enough? So, as we're trending down, we have a level here. I'll mark it. I have a zone here. I'll mark it. I have a zone here. I'll mark it. So now we have legs in the trade. There's legs in the trade. Okay? That's my second read. My third read is, are we getting an A setup or B setup? If it's an A setup, I'm going with the trend. Good. That is my third read. Now, my fourth read is basically what comprises these check marks here. My fourth read is the RSI moving average trending down? Check. Is RSI below its moving average? Check. Do we have Heikin-Ashi showing a trend to the downside? Check. Do we have parabolic SAR? SAR meaning stop and reverse. Do we have parabolic SAR? Also telling us we're making a move to the downside. Check. These are your reads. If your read is uncertain, you don't take the trade. Right? You could play level bounces if you want. Your expectations are short-lived. Now, if this was in fact the cues, it was very much a play just like this yesterday with the cues where I made $70,000. Okay? $70,000. Let's go ahead and Wreck-It Ralph is like, Tessie, I love you. I love you. Okay, let's go ahead and see what the hell Tesla is doing. Ooh. Okay, Tesla. Let's go through our reads. All right. Let's make this interactive. First read, governing trend, 1348. Boys and girls, what is it saying? Bullish. That's what it's saying. Bullish. Okay. Trend up. Long. Next, we have RSI. What is our moving average saying? Also bullish, correct? Okay. Heikinashi also saying bullish. We do have some retracement candles here, but parabolic seller is also saying bullish. Now, we look at our check marks here. 3 of them are fulfilled, right? One of them happens to be RSI. But what we can see here with Tesla is it came down and it's bouncing off of something. And we have to find that something. And I'm not finding that something. Okay. So what I would do, given the trend is up, I'm going to skip this B setup and I will wait for an A setup. Preferably that A setup happens at the 13 where we get our bounce. Daniel Mitch, absolutely. We're above 50, moving average above 50. You have the governing trend to the upside. You have your ribbon to the upside. The only thing for this moment in time right now, we're seeing a B setup to the downside. This is a quick scalp opportunity, but it is going against the trend. You guys get it? Okay. Now, 1, 2, 3, Shambo. I need you to stop doing that. Okay. Do it if you feel you need to, right? But I need you to focus on what the 5-minute time frame is telling you if you're going to play in a time frame. Now, if you're gonna live on a 4, by all means, right? We've highlighted in previous streams that although you can gather information from the 4-hour, sometimes it doesn't really align, right? At least for what's happening in the moment on the 5-minute. It's not a bad thing. I prefer to keep my charts a little cleaner, right? What you can do is go on over to the 4 and see that your overall trend is bullish. That should be good confidence there, right? The 4 is showing you that the overall trend is bullish. You mentioned the wicks for sensitivity. Okay, we'll do this here. Okay, so at one point, you guys see this candle right here? Let me circle it. This candle. At what point this candle was green, and you could tell by that wick. All right. Now we go to the 5-minute. Let me. Right. So we could also see the reverse happening. At one point, this candle was red or white, but you could see the buyers stepped in. That's why you have the wick here. Buyers stepped in here. That's why you have that wick. You can see the same here. Sensitivity here. It comes down, but buyers stepped in right at the 200. Okay. That's how we sort of kind of gauge for sensitivity there. Make sense? Okay, let's go ahead. Uh, let's throw a ticker out there. Chewy, good morning. Let's throw a ticker out there. You're always going to see wicks. Dirty Birdie, ENB. Okay, let's go ahead and look at ENB. Here we go. 200 remains undefeated. You get your ace set up with the trend. You managed to get a breakthrough of an EMA sandwich. You managed to get a breakthrough of the zone here. You do have a zone up here at 32.36, which is 6 cents away. Okay? 6 cents away. Given where you're at on this, looking at your risk reward, if you got your entry here, right here, I mean, that's a 1-to-1 for whatever size you entered on, right? If you were risking $500 on the trade, you made $500 right here. You doubled your money. If you were risking $500 here, you made $500 here. Okay. But you probably got more than you deserve here. You're about at 1.5. So you made $650. Making sense? Okay. We look at Baidu. Same scenario here. Same scenario. You had an ace setup. Previously you had an ace setup. I'm ignoring this. I don't want none of this. I'm not touching none of this until we get a break up to 24. See the 24 here is highlighted, right? So many of you are more concerned with missing the boat as opposed to landing on the trend. And that's why you get burned. So many of you are so concerned with missing the boat. Oh, if I enter my reversal here, I stand to make the most money if it drops. How does that make sense? How does that make sense? So now you see what's happening here. You're so focused on nailing this, right, that you're forgetting to land on this. That's your trend. That's where you want to land. That's where you want to be. And you know what that is? You know what that is? That's fucking greed. Okay. I'm going to say something, and this is going to hurt. right? A lot of you are probably going to kill the stream after I say this. Brace yourselves. Here we go. If you're playing with a small port size or you have middle class income, you can't afford to be greedy. You can't afford it. If you do not have at least $100,000 in investable assets, you can't afford to be greedy. You're behind. You are way behind. If you make 60 grand a year, you can't afford to be greedy. You can't. Your goal is to build your nest egg, not to be greedy. There's a time and a place to be greedy. This early on in your trading career, it is not the time. No, it's not. Wreck-It Ralph, golden rule. He who has the gold makes the rules. I need you all to focus on nailing down the concepts, building wealth over time so that you have the privilege to be greedy. You do not have the privileges I have or the privileges Wreck-It Ralph has. You cannot stomach a $20,000 drawdown. You can't. If you can't stomach a $20,000 drawdown, you can't be greedy. Wreck-It Ralph. Wreck-It Ralph. How many times have you experienced a $20,000 drawdown? A lot of you are just trying to run before you can learn to walk. You just don't have the firepower. You just don't have the firepower. Keanu, if it doesn't make sense for you, then good. It doesn't make sense for you. Mara, you're going to have to hit rewind. So, the point I'm trying to make here is do not betray the system simply because you want to be greedy. Greed will leave you homeless. And he doesn't play with margin. It's all cash, baby. It's all cash. He's playing with his own money. He can do whatever the fuck he wants to do. Let's go ahead and look at Tesla. Okay. Let's look at this. You have your entry point here. You have your 13, but you also got the 24. You are not committing to anything until you get a break of that 24. Surely, Gabe, but I could have made money here. Yeah, you could have, right? That was your thesis? Could make money? As opposed to this can bounce on you? As opposed to I might be going against a trend? As opposed to moving average? Is that 64? As opposed to the actual RSI is still above 50, right? As opposed to you still have 45 degrees here at or about. You have to wait for the market to show its hand. Hey Gabe, I know you said a big report allows you to be greedy. But do you think the big report makes you act less greedy? Yes and no. Yes and no. Um, because with a big report, $1,000 hits all day, every day, you stack them, right? But at the end of the day, with a big report, if I'm in, okay, to give you a great example, we're going to use Tesla, right? You can't be greedy with small amounts. You can't. So, being greedy is, let's say I enter Tesla here, right? And I caught the trend. I'm going to hold for as long as that trend is sustained. That's what I mean about me being greedy. For as long as the 1348 trend is sustained, I'm being greedy. Now, Wreck-It Ralph plays options. He has to play quick. But if we're talking about shares, or we're talking about futures, right? And we're not talking about Apex Funded Trader. We're not talking about Top Step. We're not talking about like your profit trader. We're not talking about any of that, right? Where you have the drawdowns, and with those drawdowns, you have to stack the dimes to pass. I get it, but it's making you a better trader. However, when you that's actually the restriction you face of playing with other people's money, because with a larger port, I'm okay with a certain size drawdown as long as I know, right, I'm in the trend and my thesis supports why I took the trade. Of course, I'm going to have a stop in place, right? But again, I'm not going to let a $2,000 loss or a $3,000 loss change the way I trade. I'm going to trade the same every step of the way. And when I post my screenshots in the community, you guys see consistently I'm somewhere between 60 and 70%. And although that may be impressive, you will find that I'm consistently hitting 3 to 1s, 4 to 1s. That's how I trade. Okay. That's it. All right. So now, price action, if we're looking at Tesla here, looks to be breaking the 24. You could have played this to the 24, but you know what? A lot of you can't even handle that responsibility. So you have to go ahead and put yourself in the safest play possible. You could probably play the break of the 24, or anticipate that you secure the bag at the 24, see if you get a bounce, and then a trade designed back to the upside. Do I trade Boo? No, I don't. But we could look at it. The trend is your friend. You have these zones here. You have day highs, right? You have day highs. You're good. It's finding support here. Now, once again, if you risked at entry $500 to $1,000 here, you are up over $1,000 here. What more do you want? You're not going to get rich at the trade level. You get rich at the port level. So you have to allow, as Wreck-It Ralph would say, those dimes to float to the top so it gives you more money, play larger, get to be greedy, manage your risk more appropriately, scale in, scale out, scale larger. But at the trade level, you're not getting rich. It's just not happening. You're putting too much stress on the trade level. If you risk 500 and the trade paid you 500, take that money. Especially if you have a small port. You do not have the right or the privilege to play bigger than yourself. You just don't. You just don't. Now, going back to Tesla, we had a condition that needed to be met. The break of the 24. That was your condition that had to be met. Right there. But Gabe, I could have made money here. You could have. You could have. Right. You have the 24. So now, RSI. You have RSI, current value. You want to pay attention to this. It is fluctuating between 50 and 49. You have parabolic SAR, Heikin-Ashi. You have your check marks here. If you're playing the 24, tighten your risk. Right? Red tape, glad you appreciate the stream. Now you're seeing, right? Because we broke the 24, we're seeing a shift. Does it mean that we're out of the woods? No, because guys, you can bounce off the 24. You could. And so that's why you take your entry and establish your risk super tight. Why? Because you're technically going against the what? What are we going against in all technicalities? What are we going against right now? Exactly. The trend. We are going against the trend. So we have to stay tight. And the sooner we lose, the faster we gain. The sooner we lose, the faster we gain. Like, don't look at your trade as, oh, I lost. No, it's you lost fast so you can win faster. Once you identify, oh, we're actually bouncing from here, you're not married to the trade. You go ahead and look for other convincing evidence. RSI, is it above 50? Is it pivoting up? Right? These are your bits of evidence. Right? Now you don't go ahead. Please don't do this. Let me explain. Please don't go ahead and have a stop here at 219.27 and then just close it and go long here. No, you let it hit your stop. You look for evidence of a true bounce. Okay? That is it. You do not front run the bounce. Okay? As long as your stop was here and you committed to the plan, you are technically in a money making opportunity. Maintain your conviction until proven otherwise. What you're doing is you're going to chase the speculation that it pops from there without any real evidence because you haven't been stopped out. Okay. There's so much focus on making money and so much fear in losing that because of that, you end up losing more. Let's rewind that again. There's so much focus on making money and so much fear in losing that you end up losing more. Just think about it. It's if your thesis is constantly being boomeranged, right, by a candle, it's constantly being boomeranged by a candle. It's kind of like a relationship where you're constantly making up and breaking up, making up and breaking up, and you're not going anywhere. You see your P&L, it's not going anywhere. Why? Because you're getting boomeranged by the candles. Wreck-It Ralph, time frame whoring's gonna do it to you too. Absolutely. Time frame whoring's gonna do it to you too. Okay? Now, assuming we still had our stop here, we might have got wicked out, right? Depending on where you had your stop. Thing is, I'd be okay with that, right? I'd be okay with that. And then I'd go ahead and see again, are we going to have more evidence? Are we going to get more evidence on the thesis that this is coming down? Or is this in fact support? And is this consolidation? Right? Let's go ahead. OTHM. What is the fuck is this? Right, you got a level right here. Ugh, it's over. I'm not liking this. I'm not. Unless I got in at the origin of the move, this here would have probably been my exit. You got consolidation. This thing can pop up or get massacred. This is a zone, an area I don't like. Do I have an area of support? I do. I could set my stop here, right here, but I'm not going to chase this up. Again, I could be wrong, but I'd rather be wrong before I enter a trade than be wrong after the trade. Trust me on this. It's a better feeling to be wrong before you enter a trade than to be wrong after. Right? So always trade on the side of caution. Wreck-It Ralph, it made its move. Looks like it's already made its move. Okay. Let me. Oh, it's a great example. So, while we were talking about the governing trend and maintaining your thesis, this is NQ. I'm up for 4,500, 4,300. This is just chopping around. I'm not going to be greedy, right? I'm not going to be greedy. So what I'm going to do, I'm going to go ahead and just take profit there. I'm done with that trade, right? There's nothing that I can't do today with having that extra $5,000. But I'm not going to withdraw it. I'm going to go ahead and stack my port so I can afford to be greedy tomorrow. I did leave some on the table though. It was as high as 7,000 apparently, but I'm okay with it. Okay. So let's go ahead and look at Tesla, because Tesla, we said our condition was the break of the 24. Can I get an amen? Can I get a hallelujah? Can I get a yes? This is a guy I want to learn from. This is a guy I want to listen to. These are the rules that I need in my life. This is the control that I need in my trading. Your trading needs to be governed by rules always, guys. You go through your progressions, right? You give yourself rules to entry. You manage your risk, right? Turn off the feelings. Turn off the excitement. Turn off the seduction of money. Gino? Okay, Gino says, I have never traded options. If I learn 1348, can I still go in with, say, 5,000, buy and sell for gains until I learn how to trade options? You can use this strategy for shares. Love you, Wreck-It Ralph. Jenny, no feelings, robotic movements. Guys, I posted a link in the Discord. It was the Humble Trader, right? Yeah, like I like her. She's cool, right? Do I still think my offering is better? Yeah. Like I do. But in her interview, the gentleman has been basically into pits of Wall Street, talks about how these algos are created and they're criminal. These are algorithms. They use rules. And the only way to beat a set of rules is to have a set of rules for yourself. I want you to think about the game of football. The game of football, right? The offense picks a play, the defense picks a play, right? Now, the players better follow the rules in their assignments, because if they don't, they stand a risk of getting burned, right? The offense has rules and assignments. Well, I don't know. I'm starting to believe that my Discord has just gotten infiltrated by the New York Giants offensive lineman. But you're playing with rules, and rules are the only way you will be successful. You're not going to be successful with your emotions. Your emotions have led you down the road of a shitty life, maybe a shitty marriage, a shitty job. Emotions have kept you from achieving your own human potential, right? Emotions in that moment when you had to make that critical decision, it was governed by emotions. And you know what? There are a lot of you, including myself, who can go back and say, shit, if I can rewind 20 years, I would have decided differently. If your emotions get the best of you in this game, you're done. It's a wrap. It's a wrap. Danny the Piercer says, I have no emotion to make people cry for a living. Yeah, Moto says if I go back 20 years, I would have asked out Dasha easily. And you know what? You know why you didn't then? Because in that time your emotions said, hey Moto, you're a little bitch. Don't do it. Anyways, Moto is like, exactly. Yeah. And I think everybody could agree. Emotionally driven relationships. Ugh, makes my stomach turn. Makes my stomach turn. No governing logic. No nothing. No rules. It's just emotionally driven. I can't live in that world. I don't. When I see myself in an environment where it becomes too emotional, I become very dictatorish. It's either I'm going to become a dictator or I'm just leaving. I'll blow the whole shit up. Yeah, exactly. I will blow the whole shit up. Like, too much emotion for me. I'm done. Can't do it. Can't do it. And Tesla, she paid, right? She paid. Now, what do we notice about this trend? Well, take a look here. That's a box. So, we come back to this trade. We're breaking into the box. Ah, sensitivity in the box. Okay. Because we have a zone, look at that sensitivity. Because we have the zone, you exit the trade, wait for a break. I'm sorry, guys, just came too late. But this is exactly what I was looking for. I was looking to see if there was anything that would impede. No, I'm not in Tesla, but I'm pretty sure Wreck-It Ralph saw that zone. You better have. You better have. Okay. Uh, Tessie has sensitivity in her box. Tickle, tickle, click the bean. Okay, I'm not joining you on this one, Wreck-It. I'm not joining you. Holy shit. Uh, okay. Okay. I I think we're done with today's stream. Oh man. All right, spy. She says friendly. Sorry, he says. Um all right, spy breaking the 24. We see that there, and then I want to answer your question. That's actually a really, really good question. Right. Um it's a possible bounce here. All right, Paul. Hello. Okay, so I want to get into this question here. Let me scroll it up. And he says, Gabe, can you please help me understand this? I'm sure there's others like me. When doing the prop firms, must we kind of live in the candle in lieu of the trend? The whole drawdown thing. Okay. So let me make this clear. Their money, their rules. Right? They're their money, their rules. So the drawdown is an extra layer of fear that you have to contend with. And it's an extra rule, an unnecessary rule. But in the world of prop firms, they make money in you failing, right? I read the fine print on some of these prop firms, and they talk about how their challenges are so challenging that even really good traders fail. And it's because the rules are not designed to allow a good trader to be a good trader. So, short answer is this: their rules, their money, trailing drawdown. You're gonna have to play the candles, you're gonna have to play the levels, and you're gonna have to play fast. Then, when you pass your evaluation, like last night, I passed a prop firm challenge, and my first objective was get out of trailing threshold, right? So I needed to break out of that so that I don't have that element in my trading and I can go ahead and trade as usual. Right on a $150,000 account, that trailing threshold stops following you, I believe, at 59.50 or something like that. Whatever that is. But um the rules don't make for bad habits. It forces you to be aware of their rules. And if you want to pass it, you just got to play by the rules. There's no ifs, ands, or buts. Now, alternatively, here's the other alternative. By the way, if you want to check out Apex, check out the link down in the pin to the top of the comments down in the description. Alternatively, you guys could go ahead and take out an equity line of credit and fund your portfolio that way. Ooh. Oh, you wouldn't dare, right? So just consider these prop firms cheap access to cash as long as you follow the rules. All right. Daily Taylor says, don't do that. Exactly. That's what I'm saying. That's what I'm saying. It's not financial advice, guys. I'm not giving financial advice. What I'm saying is what is your alternative? Take out a line of credit, right? And then blow up your account. Whereas with a prop firm, you can play by the rules and build up the port. right? So I just want to be, yeah, you are risking your home. Life's a risk, right? So the lesser of the two evils, prop firm, right? You could go ahead and risk your 401k. That's the other thing, right? But people are like, oh no, I'm risking my future. Everything's a risk, guys. Everything. Now, I don't say risk your home. And again, this is not financial advice. But if you look at the risks of cashing out your 401k, cashing out your home versus the risk of a prop firm risk, this small. Leverage on your home, this big. Risk on your 401k, this big. So I think you're better off just playing by their rules until you build a sizable port. And then you know what you do? You take that money and instead of paying bills with it, right? Because I do see people doing these prop firms and they're taking out the cash and they're buying shit with it. Like, are you fucking serious? You're building a career in prop firms? Like, no. If you have a withdrawal, that goes into your port. And then you let that port work for you. All right. So, once again, because I don't want people to get confused, I'm not advising you take a line of credit to get your home. I'm not advising that you cash out your 401k. I'm just saying the amount of risk compared to a prop firm. You know what? I'll take that smaller risk and play by their rules so I don't have to go ahead and take bigger risks. That's it. Link down in the description. Check out the pinned comment there. Trade 1348, free trial. Yeah, now I'm done. People really would do it and blame me. Yeah. Right. STB's still dealing with other issues. Right. Have a good day, guys. More streams like this, but I'm going to pound it. We're going to pound it. We're going to pound it. All right. So, Moto, ring the loop next time.